mark for the rand, having even gone all the way to 13.50 last year. We certainly do hope that it is a better year for the local currency. Let's touch base now with Razia Khan there, as South Africa's economy, of course, seeing some turbulence last year, even entering a recession at one stage, but things have started looking up towards the end of 2018 in particular, heading into this year. Of course, a whole lot of summits were hosted. The Organization for Cooperation, for Economic Cooperation and Development also expects economic growth to pick up slowly this year, driven mostly by exports. So let's get an outlook for South Africa's economy heading into 2019. We are joined on the line, Razia Khan, Chief Economist for Africa and the Middle East at Standard Chartered Bank, and she does join us on the line there live from London. Razia, thank you so much for your time this morning. It has been a trepid time for South Africa. Just when we thought 2018 was going to be a great year, sadly, it didn't turn out that way. We'd be lucky to get 1% growth. But should things be looking up for 2019?
Well, that seems to be the consensus belief. Certainly, there was a great deal of disappointment. In 2018, the expectation had been initially that economic momentum might match the reform momentum. Those hopes were not necessarily realized. Nonetheless, we do expect a modest recovery for the South African economy going into 2019. There are still a great deal of challenges. There are a number of challenges, and of course the Eskom situation, power availability, is likely to be front and center of that. What lies behind this belief that we will see continued economic recovery? 2019 is an election year. We expect that consumers, having had some years to repair their balance sheets, there hasn't been a great deal of increase in mortgage-related debt. This means that consumers overall, having seen increasing incomes over that time, are in better shape to start spending. We have seen inflation being relatively low and well-behaved. Recent fuel price cuts will help with that momentum. But the key for the South African economy is investment. The economy has not seen a great deal of investment in recent years, certainly not private sector investment, and if just that factor should turn around in a meaningful way, it will make a big difference to growth.
Do you think that the summits we sort of held last year, we had the Job Summit, we had the Investment Summit, we even had the Africa Investment Summit coming through to South Africa, even the BRICS nations came through to South Africa and China, then formidably giving a whole hoard of cash as well to the likes of Eskom. Do you think any of that is bound to perhaps filter through to this year and certainly help the cause as we try to chart a better way for growth beyond that 1% mark?
It's reasonable to expect some departure if you're looking at the investment pledges and the amount of investment that will essentially be realized. There's likely to be some difference. But given the very weak pace of investment growth that South Africa had seen, not just last year, but for a number of years preceding that, it will not take very much of an increase to move the dial on investment. So even if a fraction of the investment pledges that were made at last year's investment summit do end up being realized, that could make a big difference. Of course, this does not mean that there are not going to be other external headwinds to growth. The global outlook is looking a little bit less certain. The reaction we've seen in markets so far today is reflecting that uncertainty. We know that South African financial markets are always very much influenced by what is going on globally, and this is likely to be a key test for the economy as well.
Yeah, very quickly then, two things that I wanted to touch on very quickly with my next question. One is South Africa's credit rating. Moody's the only one holding South Africa perhaps in what would call a positive light. And at the same time, you continue to have other international factors at play here. You're in the midst of Brexit right in London, of course, so you'd know that one quite vehemently. The US-China trade deal in itself, normalizing of interest rates across the board. All of those factors are certainly bound to hurt. And plus, then you bring in political will in what is an election year, as you mentioned. How do all those things fit into South Africa as we try to perhaps garner a whole lot more growth and bring in the investment you speak of?
So the key challenge for South Africa is how is it going to be able to deal with its accumulated debt levels and also the threat posed to that macroeconomic situation by the current state of state-owned enterprises by the likes of Eskom, SAA, and others. Right now, what is getting in the way of South Africa receiving an improved credit rating, being moved back to investment grade by the other ratings agencies? There are a number of things. First of all, growth has been too weak to allow for this to happen very easily, but the big uncertainty is the threat posed by the so-called contingent liabilities. Will the government have to take on a lot more of the debt of state-owned corporations? There's uncertainty around that, and until something is done to improve the financial management of the state-owned enterprises so they pose less of a threat, it's very difficult to see South Africa moving back to investment grade from all the different credit rating agencies. Then, of course, there are the external threats that you mentioned. A more volatile external environment could be translated into how the rand is impacted, and that will be meaningful for South Africa as well.
Razia, we'll continue to have this discussion throughout the year, and hopefully things do pan out a little bit better for South Africa, as you make note there. Happy New Year to you, and I trust you'll have an amazing one. The Chief Economist for Africa and the Middle East at Standard Chartered Bank there, Razia Khan, joining us out in London. Now, I thought it would be interesting to chat about another aspect. Now, obviously, a whole host of students will certainly be a little bit concerned and perhaps even more excited about their results, which are set to come out today. That's matric results, particularly from the IEB or private school students. And in note of that, and with regards to the markets, we'll have a look at just how things are performing on that listed private education company front. It is quite interesting to note that we have three of those obviously inside. Curro Holdings has been in the market for quite some time, and those really occupy a large part of South Africa's market, and it's quite interesting to note there that that share price had fallen 40% in 2018 with a market cap there of around 10.6 billion rand. They are expected to spend around 400 million rand on 6 new campuses, with more schools, of course, in township areas planned as well. That's all part of their 2 billion rand capex budget, which is expected to be put through there as well. They do have 139 schools currently and 57 campuses, which Curro Holdings does hold as well. And they do have a revenue, particularly for the last financial year, of around 1.24 billion rand. So a company there that is the make or break, so to speak, of the listed private education sector. One that came through last year was Stadio. And really broke through more in 2017 more than anything else. Stadio did unbundle from Curro Holdings, and they did manage to list on the JSE in October 2017. It is, however, an investment holding company which focuses on investments in that higher education institutions. It went from around 1,112 students in June of 2017 right through to 27,777 students, and that's by September 2018. Some of its brands do include the likes of Embry, AFTA, of course, you'll remember as the great art school as well, SBS, Lysov, and even the Mill Park Business Schools are all part of Stadio's holding. The other major one there is Advitech, that has been a stable part of the industry in itself. It does manage the likes of Crawford, the Trinity House schools, and all the Abbott schools. When it comes to higher education, then it does take care of Varsity College, Rosebank College, and a few others when looking at tertiary schools as well. It is looking at the likes of Tongard Hewlett's land that it does have in the eThekwini municipality in order to build a new private schooling campus there for tertiary education. So perhaps a new university coming up in eThekwini to house around 10,000 students or so. That is expected to cost around 1 billion rand for that expansion. They do also have plans to take over Monash University, of course, that we'll know quite vehemently. It is the Australian brand which is pulling out of South Africa after around 18 years or so of being in South Africa. So it does seem that Advitech will take that over at a price of around 343 million rand. It does seem that indeed the private listed education services are expected to take over the tertiary education sector, and I believe that, you know, with 167,000 students in private education in South Africa, there's a greater need for people to perhaps get into the private education space when you have 1 million students in public universities. So clearly the message out there is that these sectors will certainly make a great move, particularly this year, JSE's market cap of these stocks, the JSE market cap is 12.8 trillion rand. Yes, they only occupy 21.5 billion. It's a very small fraction, right, of the JSE as a whole, but certainly an interesting sector to look out for into this year. Now let's head on over to some other international news. Qatar's